Ladies and gentlemen, Greg Michalowski with that Forex Quick Look. I'm going to take a look at the euro versus US dollar. Today's date is January 2nd, 2023. In the earlier Kickstart video, I took a look at the euro versus US dollar from the daily perspective and then looked at the hourly chart. I'm going to do the same thing right now. Why? Because in the earlier video, I talked about this 50% midpoint. This is of the move down from the high price that we saw in 2020 to the low price that we saw in 2022. The midpoint of that move comes in at 1.0942. And indeed, the low price in trading here today reached down toward that 1.00942 level. The low price for the day actually came in at 1.09, let's see, 1.0949 before rotating back to the upside. I'm sorry, it was 1.0940, so just below the 42 level before rotating back to the upside. So let's call it a successful test of the 50% midpoint level, and the price has moved a little bit more to the upside. We're currently trading around 1.0950. Now let's take a look at the hourly chart and see what happened after testing that level. And you can see the number of different times that the price came down to that 42 level. We actually had two hourly bars that went just a little bit below it down to that 40 level before rotating back to the upside. The high price since breaking to the low has reached up to 1.09678. So it was a modest rise to the upside. We did need to get up toward the 38.2 at 1.0980 to get above that level to increase the bullish bias. So if I were to characterize what we're seeing here from a technical perspective, I would still have to give the sellers a more control here. Why? Because the price did move below the 200-hour moving average. That's a green line in this chart right through here. And that was the first time that we moved below that level since, or traded below that level since going back to this day right here around December 13th. So getting below that level was more bearish. Also getting below the 38.2% retracement was more bearish. So as long as the price can remain below those levels and you're more inclined to be more bearish, the tilt is a little bit more to the downside. Now we do need to get below the 1.0942 level. Again, that's a 50% retracement off the daily chart, and then if we get below that level, we have another 50% retracement level that's in play. That level is of the move up from the December low right here to the December high right here. The level comes in at 1.0931. The level also corresponds with the number of different swing lows and swing highs going back in time to this area right through here. The market traded above below level, moved higher, then moved below it here, and started to use that level as resistance here before breaking to the upside, and then using the level as support here, and right here before moving to the upside. So getting down to that level and through that level would also be more bearish. So watch the 42 level on the downside, watch the 31 level on the downside, get below both those levels in the sellers. Add to the bearish bias. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.